Since the beginning of the year, we've seen such a rally in China. In fact, the Chinese market have outperformed a lot of the other markets, including the US. So as we sit here today, my first question to you, are you changing your call on China?
What I've been banging the drum about for 15 years is that the accounting of these companies, especially the ones that are public outside of China, the numbers cannot be trusted. And we are in a world where I think that matters less and less, a world that is dominated by passive flows, where active investing is receding or has been receding for quite some time. So maybe that matters less. But then you layer on top of that the geopolitical risk. It's funny, this morning we had a meeting with a potential investor, and the meeting was going really well. But at one point they told us that they were pretty invested in China, they were excited about it, and they look at things like that based on geopolitical or assessments of governments, et cetera, and government policy. And at the very end, I made such a mistake from a sales perspective because they asked, well, what do you think of China? And, blah, 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 blah. I think Xi has been an absolute disaster for China. And literally the response was, well, okay, on that note, thanks for coming. So I think that, if you're willing to take the risk that you wake up one day and, China has gone to war to try to retake Taiwan or has barricaded the island, and that could lead to a kinetic war. If you're willing to take that risk, great. There's a price for everything. There's a price for that risk. India is going to be a major theme, right? The finance industry sells financial product. It always needs a theme to get people excited. For a long time, that was China. Now it's AI, and then the derivatives of AI, such as power, and India is going to be something that the finance industry decides to package up, and really push on investors at some point. So a wall of money will be thrown at India. When, I don't know exactly. But one of the things that I was actually really surprised to learn about India, though, is even as foreign investors, you're hit with capital gains taxes. And the rates are pretty high. I think it's 33% unless you set up management company in a place like Singapore or Mauritius that has a tax treaty. And that makes it very difficult for us as institutional investors, because a lot of our clients are non-taxable in their home domiciles. So for them to get clipped 15 or 33% is a pretty big deal. So my understanding, and I don't know that much about India yet, but my understanding is that there's really no discussion of changing that regime. But I would say that if India is serious about getting foreign flows into its capital markets, they need to exempt foreign investors from capital gains tax.